Hello, this is Brandon Christy from Christy Capital Management with an educational economic update for February 2017. In this month's video, we'll discuss some of the major headlines that influenced markets in January and provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Do you remember where we were this time last year? In January 2016, the markets were in a slide and filled with volatility. In fact, fears about China's economy contributed to the S&P 500 and Dow experiencing their worst ever 5-day beginning of a year. However, 2017 is off to a different start. This January, we saw the three major domestic indexes reach record highs, and the Dow surpassed 20,000 for the first time ever. We also learned in January that personal income increased by 0.3% in December, slightly below expectations, but enough to push income up 3.5% for 2016. And retail sales increased by 0.6% for December, ending up 4.1% for the past year. Right now, we're also well into corporate earnings season, and many reports are beating expectations. As of January 31st, blended earnings were up 7.1% in the fourth quarter, and revenue increased approximately 4.2%. Despite this positive data, the economy still has opportunities to improve. In January, we learned that gross domestic product, or GDP, lagged in the fourth quarter of 2016, showing 1.9% growth compared to the third quarter's 3.5% measure. As of this first estimate, real GDP increased by a total of 1.6% throughout 2016. If you look more deeply at the numbers, however, you will see that many aspects of our economy grew in the fourth quarter, including household purchases, business equipment spending, and inventory accumulation. Instead of the lagging numbers showing a widespread slowdown, one area is largely responsible for decreasing growth: net exports. In the fourth quarter, we saw a jump in imports and a decline in exports, which combined to pull growth down by 1.7%, the biggest drag since 2010. Trade is an incredibly important part of our economy. As the most recent GDP report shows, any change in the balance between imports and exports can affect growth. In fact, without the decline in net exports, fourth quarter GDP could have been beaten third quarter measures. As you are surely aware, we are currently in the middle of a hotly debated, headline-grabbing political environment, and some of the key conversations impact trade, from taxing Mexican imports to restricting visitors from certain countries. These new policies and the reactions from the nations they affect could change the balance between American imports and exports, and thus our economy. Of course, we are not political prognosticators, we are financial professionals. So, while we will continue to closely watch new policy developments, our focus remains on market fundamentals. Throughout 2017, we will analyze the economy's underlying health and strive to find new ways to pursue your goals in a challenging and changing environment. As always, we are here to help you understand what's happening, no matter the headlines. Well, that's it for the February Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Please remember that nothing we talk about here is a recommendation. You can call us at 866-331-7749, and it will be our pleasure to discuss your personal financial situation. Well, this is Brandon Christy with Christy Capital Management and your February Educational Economic Update.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.